Welcome to the Home Building Hub, your essential podcast guide to building your new home. Hosted by industry experts Colin Bischoff and Darren Brennan, this conversational podcast will help better educate you about all things new home building so you can avoid costly mistakes and enjoy your building experience to the fullest, no matter which home builder you choose.
Hey there folks, Colin here from the Home Building Hub. Welcome to another episode. I'm here with co-host Darren Brennan as always, and this episode we are going to be talking to you, to the first home buyers. We're going to target this episode to first home buyers on the basis of giving you the top tips from myself and Darren to help you get through the process, and really just based on feedback from some of our other listeners, just focusing on a specific target market being first home buyers, and then after this we will do a specific one for investors as well. So good morning, Darren. Third time we are trying to crack onto this one, isn't it? We've had a bit of technical difficulty.
I was going to say that quite funnily. I thought I won't let you know that's where I was going to drop it to start, but you've jumped the gun on me. Third time, second day at this. So that's what happens, I guess. And there's some of the technical issues that people probably don't realise are going in the background. You know, we've had some challenges through some of them where people have dropped out. We've had guests on and they've disappeared. And we go like, what do we do now? Anyway, it seems to come together, mate, and your magic work in the background pulls it together in the end, mate. So I've changed computers, changed locations. I've tried an Ethernet cord that doesn't seem to bloody work. Anyway, should be working a treat today, mate, and hopefully we can rip through this and provide the value that we're aiming for. I guess I'm going to kick in with the fee. So the fee is please share the podcast with others. We'd really appreciate that. So if you do enjoy the podcast, just pass that on to one other person you think might get value out of it. That's number one. Number two, if you get a chance, leave us a 5-star review. It's pretty easy on any of the platforms to do so. And again, that just hopefully shifts it up the ranking a little bit. We get shown a little bit more. And again, that value we're hoping to impart on others is shared. And we've got a disclaimer for the podcast. I think it's relevant just given the topic we're talking about when we rip into some finance stuff, etc. But the disclaimer is, whilst we're all about providing value to you, this podcast should not be considered as legal or financial advice. It contains general information only. You should seek out independent professional advice on your personal situation before making any legal or financial decisions. So, mate, why don't we rip straight in? I mentioned finance off the top. I think it's the most important part for a first home buyer to get right. Maybe give us a bit of a rundown on that.
Yep, certainly. So finance is for most people listening or some listening, you'll probably think to yourself, well, obviously finance is the first step. But the truth be told, that a lot of home buyers get out there and visit display villages and start appointments and things like that without really having a full understanding of their budget, borrowing capacity, what capacity versus what they can afford and want to afford. So our recommendation is, before you do any of that, go and see a finance broker. And we prefer a broker over a bank. So if you've made that decision that you don't want an established property and you want to go build, that's great. Go to a finance broker that has experience in construction lending. Okay, that's our first tip for you. Make sure you do that. If you don't know of any, then yes, absolutely, you can go to get some of those people through the builders. They've always got at least one connection to a broker, and some have many more that they can put you in touch with that's got that experience. One that we had spoken to in our second episode, Daz, really our first main episode, was Mark Palatkinson from Mortgage Domain. So for those interested in learning a bit more about the finance stuff, go back to episode number 2 and you'll learn a bit more there. But that's definitely the first step. As I said, so many people come in and start doing all the fun stuff before they get bedded down the actual money component. So please make sure you do that. It'll work out what you can afford, I guess what you're willing to spend, work out your deposit component, work out whether you need to save more money, because you can still get into the market even if you haven't quite got the deposit yet. You just got to get land that's not quite titled as in not ready to build on. So there are solutions for you, but it does start with getting that, I guess, capacity and in some cases pre-approval, depending on your timing up front, to give you that confidence to go and buy something. Anything else to add to it there, Daz, for finance?
You're right. And again, it's interesting, if we think of some of the other guests and stuff, Rory mentioned exactly that, is buying untitled land often buys you time. So you're buying today's price, and having a great broker is going to also start different conversations. So it could be, getting your parents as a guarantor, for example, could be a good option. That sort of stuff that often people don't think of, that might get them on the board earlier. It could be a financial gift, something like that might just be that little bit that gets you that nudge over the line. So your broker will talk to you about how that works. The other one is, they'll talk to you about car loans and credit cards and how that can be impacting your borrowing capacity. And it might be that you've got a credit card that's got a big limit, but you can just reduce the limit because you haven't used it. It's got zero balance on it. You don't owe anything, but you've got a big expending limit, and that might change your borrowing capacity by, could be 50 to 100 grand, so those sort of things your broker's really going to help you with, trying to make sure they can help you get into that first home. So, getting your finance sorted is imperative, and there'll be many different solutions to that. And you touched on using a broker, Cole. I think the difference that I saw recently is about, in people's borrowing capacities between different banks, about 180 grand. So you can go to one bank and they'll lend you, let's call it 500,000, and you go to another bank, they'll lend you 680,000 because of the way they assess your borrowing capacity, and also because of the interest rates and stuff that they're offering. So, that can be significant. That can be the difference whether you can or can't afford to get a home. So, they're going to really guide you through that, which is awesome. So,
and that's why a broker is important, because they have the know. They know which lender suits your circumstances, because everyone is a little bit different. And the only other thing I'd share there, Daz, is be open and honest with everything. Put it all on the table with your broker. And if today is not the time you can buy, then work out with them when it is, 3 months, 6 months, 12 months, etc. Because as we said, there are some opportunities for untitled land. You can essentially get today's build price locked in and get yourself a block underway, and so you can start that process and continue to save in between then and now. Yep.
Yeah, for sure. And it is the great Australian dream, right, of owning a home. So, why would you want to miss out on that? Mate, I want to kick off on to, doing your homework. And I think it's really important. One, get your finance sorted. Two, do your homework, see what's out there. And one thing, I mentioned the great Australian dream. Governments love first home buyers, right? So they often have many incentives out there. So there's all sorts of government grants available, and I'm going to run through a few of them. You've got the first home buyers grant, which is a $10,000 government gift, essentially. But again, ask your broker about whether this funds could be used towards your deposit. So again, depending on how that they're going to structure your loan and which lender you're going through will depend on when those funds are being released. And it can vary from state to state when it's released. So it's certainly worth asking those questions. And there's also purchase caps. So if you're not aware, you can get a bit, you can miss out because you've gone over those purchase caps. And what I mean by that is it could be 650 grand, 750 grand. Again, it varies slightly state to state. So do a little bit of homework on that. Ask your broker, talk to the sales consultant. They're going to be able to help you with that. You've got first home buyer stamp duty savings. And again, this varies from state to state, and there are caps on that. And it's, against that total purchase price. But that can mean you may not be paying any stamp duty at all on your first home, and that can be significant. I know in my place, I think I paid about 38 grand in stamp duty. Like, it's huge money that you don't need to come up with. So again, great incentive for first home buyers. You've got the first home buyer low deposit scheme, and that's a government initiative aimed at helping first home buyers purchase sooner by lowering the necessary deposit, right, to secure a loan. And so when approved by the scheme, the National Housing and Investment Corporation, which is a government entity, essentially goes guarantor for you for up to 15% of your deposit, meaning that you don't need to pay lenders' mortgage insurance, which again can be a significant cost. We can be talking thousands or into the, it could be 15 to 20 grand even that you may need to save up depending on the lender, right? And so that is specifically back to some lenders, is not with all lenders. So again, talk to your broker because they're going to be able to guide you through that. You've got the home guarantee scheme, which allows eligible single home parents, right? So single parents to be able to use as little as 2% deposit. And so we're talking really low amounts. They'll also be entitled to the first home buyer grant, etc., the stamp duty savings. So again, that family home guarantee or the home guarantee scheme is just another one of these incentives. So have a chat. You might be thinking, I'm no chance of getting this to happen. I might have a good job, but I can't save a deposit. Well, you might only need as little as 2% of the total purchase price if you're a single parent. So again, talk to your broker. They're going to be able to guide you through that. You can always go to the state revenue office's websites for your own state, and they'll give you more information there. You've got the shared equity scheme, home buyer fund, and that's recently been launched. That's specifically in Victoria to help home buyers into the market. And that basically means that the government's going to take a share of your property. So as the property increases, so they might own, I think it's up to 40% that they'll, it's up to 25% of the home value, sorry. So for example, if you're going to buy a home for 600 grand, the government could take out 150 of that and share that with you. You end up owning the 450 or taking a mortgage out for the 450 less your 5%, right? And again, it's just another way to look at opening the options for you to be able to actually get into a new home. You've got the first
just on that one, Darren. My understanding is that you can't get off the plan. You can't purchase off the plan with the shared equity scheme.
Correct.
But you can get, as long as the house, I think, has certificate of occupancy. So for those trying to work out what that is, that's basically right near the end. So you can enter a contract with a new build that is nearly completed or just been completed. There are some builders that do offer that, which is why I've mentioned it. Like a townhouse, for example, can offer that situation. You can take advantage of the shared equity scheme as well. Yeah.
And then the other one you've got is the first home super saver scheme, which is essentially allowing you to save your deposit into your super fund, right? Which one means you're going to get generally a higher return on that investment because super funds are generally paying pretty good returns. Two, you're paying a lower tax amount on that. So you're going to run that at a 15% tax rate. And again, talk to your accountant, talk to your broker, because we're not financial experts here, but running off the detail that we've been able to gather, right? And you can contribute up to $15,000 per year into your super extra funds to be able to save up a bit quicker. And again, less tax, right, which is a benefit for you. You're able to do it through your super. It has to be contributions above what you would normally put in. So I can't remember now, Cole, did it just move to 10.5 or 11%, whatever the new super contribution is? It has to be above that. So it can't be the employer's contribution towards your super. It has to be you making those payments. But essentially what we're saying is there's lots of different ways of which the government want to try and help out first home buyers to be able to get into a home. They understand it's a challenge. It isn't easy, right? So they're looking at different ways and means. One, giving you money. Two, stamp duty saving. Three, different ways and means of trying to either help you save a greater deposit, require less of a deposit, not needing lenders, mortgage, insurance, etc., to try and help you into a new home. And I think there's some really good incentives there. So don't think it's impossible. Talk to a broker, talk to the sales consultant, check it out in the state revenue office for your state. And there's plenty of options available to you as a first home buyer from a government grant perspective. So maybe Cole, talk about locations and stuff then.
Yeah, so it's good. There's so many options from the government there to entice first home buyers. Our advice has always been and will always be, if you've got the ability to get in, then get in. Maybe it's a bit smaller, maybe it's a bit further out than what you'd ideally want, but your first home is really, it's not necessarily your last home. So if you can get in, then just do that. And that's for anything, to be honest, whether it's a new property or an established one. Like, that's just once time in the market, as we keep saying. But we do see people hesitate, Darren, a fair bit in our industry. So we would say move forward if you can afford it, and only buy what you can afford. Okay, so that leads into location. And the land price is usually the key component out of a house and land package. These days, the land price is going to be the more expensive component out of the two in most cases. just depending on that location. So if you're looking around the metro areas of whatever state you're in, naturally you can expect the price of that land to be substantially higher, the blocks substantially smaller. But what I'd ask you to consider in doing your homework is, where are the areas that we'd be happy to live in? Do we work remotely? Can we travel in an extra 45 minutes and things like that, just to get our first home, and understanding that maybe you only have to live in it for a year or 2 or 3, and then it becomes your first investment property as you bounce onto the next one. So that's what I find the biggest gap for first home buyers, Darren, is that they're not thinking that far ahead. They're just thinking about the here and the now today. And I want every inclusion, I want every upgrade, and I want the best and the best. And it's like, I would say, ground yourself a little bit, and we talk about the needs and wants in a minute. But as far as finding the right location, shop online first. Okay, so we've had a guest on our podcast here, Chi from Open Lot. That's a really good place to, as far as location's concerned, jump on, and you can find every estate really across the country in the states that he sort of services there. That'll give you an indication of what's out there where you can buy land. And then you can start getting also a feel on realestate.com and Domain and those sorts of sites around package pricing, so house and land combined. So it's part of that doing your homework process. We're not saying go and have 25 meetings with different builder consultants or land consultants yet. It's a bit early for that. Just go and get a feel for it online, maybe a couple of phone calls just to get, an understanding of what the price points may be. And then also builder websites, you can sort of do that as well. They'll have packages on there. Okay, so I would say that's the first step, Daz, in terms of finding the right location. You can then move over to, in the next steps we talk about, to talking in a little bit more detail with consultants, land ones or builder ones. But just do a little bit of homework online, get maybe a couple of phone calls, just get your grounding, understand, okay, in this suburb, it's going to cost me about $300K for a block of land, which is great. But if I move closer in, it's going to cost me $420, and then that leaves me this much for a house. Okay, so then the question is, well, what house can I get for that? Whatever's left. Okay, so that's really simple numbers in terms of marrying that up.
Yeah, and there's some great information also available if you go into any home on realestate.com. And again, you can click into the suburb profiles and it'll tell you all about what's going on in that suburb from a pricing point of view, whether it's, the market's turned on that and you're trying to pick the market. And again, it's interesting. I was looking at some of the stats on Open Lot just yesterday, Cole, and it was talking about that about 35% of the people in the 2 corridors I was looking at, which was Geelong and Ballarat, about 35% of the people have got a deposit saved, but clearly they're holding off. But it's interesting that pricing in those 2 areas from the established market certainly looks like it's getting to the bottom of the dip, I guess. But then I looked at Truganina as an example, and that's already turned the corner. Prices are up 1.1%. Over the last 12 months, like it's already actually on its way up again. So again, you want to be mindful of those sort of making those decisions. You don't want to be sitting on your hands if the market's already going up again. So getting that information, and it's right there at your fingertips. You can go straight to Open Lot and gather that information. You can go straight to realestate.com and likewise do the same. So it's not like there's secrets that no one shares with you, just a matter of having a look around. So, you can certainly gather that information pretty quickly. I think another obviously step then is to get out and visit a display them if there's one available of the home that you like. So you've done your shopping, you might have found 1, 2, 3 homes that you like the look of. The package prices are in your sort of price range. It's certainly worth your while going out and having a look at it. So to make sure, because sometimes what looks great on paper doesn't look as good in the flesh. So again, if there's not a display, ask the builder's consultant. Do they have one under construction you can go see? And again, not every builder will allow you to do it. There's some OHS laws that need to be complied with. But if I'd be certainly encouraging you to go and see that home. I know it's your first home and it's probably less relevant, but it's also really relevant that you get there and you want to feel happy. You want to know that you've purchased something you're going to be happy with. So if that means traveling across town to look at another home on the other side of town, it's worth the hour's drive. And over the years, the number of people have said to me, I wouldn't drive that far to go look at a home. You're like, are you mad? get in the car, mate.
Yeah.
It's an hour. You're going to be buying a house. You're not, like it's a big decision. So, do that little bit of extra homework by doing that. Certainly find out from the builder's consultant what's in the package, right? Find out, is it a fixed price package? So are the site costs fixed or not? And again, if they're not, why? Right? Just ask the question why. There might be a really relevant reason why that might not have been fixed yet, but they're going to get them fixed, once they've got an inquiry on that package. It could be that, there's a couple of concerns around the lot, but at least you're going in with your eyes wide open, right, around that. Do you get to do a colour selection, or is there just colour boards available? And again, for some people, they really want to get involved in the colours. They want to go into a big place and select absolutely everything, and that's a big part of their journey. For others, that's overwhelming, and they don't want to do that. I know it was actually our second home. We bought one that was under construct from a major builder, and we didn't get to choose any of that stuff. I kind of at the time think that was a good thing for me, because I like the stress of that, trying to, want to make sure my wife's happy with everything, etc. No choice sometimes is a good choice. So it kept it really simple. How long's the builder's warranty? Are there any discounts available on the land if you purchase through the builder? And again, that's not always the case, but it's worth asking, right? They might say, yeah, actually, I know about this, or I might be able to get this, or let me ask the question. And that might just help you along the way in getting a slightly better deal, but understanding everything that you're getting. So asking lots of questions is certainly the key, and taking that information away. I wouldn't say go to 50 builders. You're just going to get overwhelmed. Do your homework online, pick the 2 or 3 that you like, go and find out the information on those, and then make a wise decision from there. So that's probably the next point. What else you got, Cole?
I guess one thing, so I guess we're moving through the online part, and then you can start visiting the land offices and the builder consultants and displays. And as you do that, you're probably going to have to start leaving your name and number at a few places. And I guess that's why we say do the online first and don't leave your details, because otherwise you're going to start getting phone calls before you're ready to take them. But once you're ready to have that discussion, go through what Darren sort of just mentioned. One of the other things we've got written here is when you are talking to the consultant, whether it's land or house, talking about the land itself, make sure you find out what those deposit amounts are, how much you need to contribute today if you were going to lock it in. Usually the build is usually 5%, and then land is usually 5 or 10%. Okay, so check what that is, because that will impact essentially how much you got to put down in the early days. So that's probably step 2, and I think step 3 is to move to that is one we've covered before, Darren, in another episode, is establish a needs versus wants list. Okay, so if we backtrack now and we go, we've done finance, we've got, okay, I can borrow 800,000, 700,000, whatever it is. Doesn't mean you have to go and buy a package for that price. It means, okay, let's then do the homework, as we said, whereabouts, how big, how small, locations, etc. Talk, online homework, talk to a few people. Now you've got a really good understanding of what it is that you can get. So now what you need to do is finalize a needs versus wants list. So on the left column, put in your needs. On your right column, put in your wants. Okay, so the needs are the things like, okay, I need 20 mil stone because I don't want laminate. That's okay. But do you want 40 mil stone? Maybe you do. Okay, so these sorts of things. Need 4 bedrooms instead of, or maybe need 3 bedrooms, want 4 bedrooms, things like that. So it just helps go back to your borrowing capacity combined with your needs versus wants list will help keep you grounded and keep you online or on track to make sure you purchase something within the realm of what you can afford and what you really need versus, because it's pretty quick and easy to go from what I need to, oh yeah, I'll upgrade that and I'll upgrade that. And all of a sudden you're 50 to 100K over again. So we really want you to avoid doing that by going back to your needs versus wants list. One of the other tips I can give for a first home buyer, some may not agree. There are some first home buyers who have the money, they have the capacity, they earn good money, etc. That's okay. Go and buy your dream first home. That's fine. Nothing wrong with that. But most first home buyers I've dealt with, Darren, over the years, they don't necessarily have the ability to buy their dream home up front. So I would say in that event, in that case, like we said earlier, Your first home is not necessarily going to be your last home. So I would say to you, as a first home buyer, treat it as an investment. It's going to become an investment, or you might sell it and use that equity you built to then go and buy your dream home, which might be the second or the third home, just depends down the track, okay? Depends on obviously your income and how old you are and all those sorts of things. But if you treat it like an investment, it's easier to then take a bit of the emotion out of it and make sure that you're following your needs list rather than your wants list. Because at the end of the day, if it's 2 years, 3 years, 5 years down the track, you're going to rent that thing out, then realistically you don't need 40 mil stone for a rental, and it won't increase your rental weekly rental rate, so any return or anything. Okay, so they're probably the established needs versus wants list tips. Anything else on that one, Daz?
I think one trap, and it was interesting, I sat in a display home yesterday, so I was back out in the field, and everyone walks in and says, I just want to know how much it is as displayed. Like, it's such a trap, right?
Yeah, it is.
In reality, I've never sold a house other than an actual display home that's as displayed, so you're almost better off changing that up yourself. Like, it's yes, it's important, but how much would it cost me to build that home if I just wanted bare bones? And then if I gave you the 4, 5, 10 things on my wish list that are really important to me, what's different about the layout of that display from the standard? So if the layout's the same, great. You already know the footprints, right? Okay, cool. Because often there can be 100, 200, 300 grand worth of upgrades in a home, sometimes more. I know with ours, some of the top end stuff like that we do, that can be huge amounts of money in, but above the base price can sometimes be double the price. Got an incredible house, but no one's buying that. Like, being realistic, people are certainly first home buyers. And I got when I was selling many years ago in the displays, I worked out that it was better to give someone a quote up front. Just give them a quote for that actual house as standard, right? And just add in your carpets, your tiles, a bit of stone in the kitchen if it wasn't included, 900 mil appliances, a few of those bits and pieces, just the nice stuff to make it feel nice. And then let's go and talk about how about 3 or 4 other things from the display that you might really like that, can look amazing. You see fireplaces in display homes, and they can be 15 to 30 grand. Everyone wants one, but no one buys them, right? Or very few people do. So they look amazing on the display. But again, that's not to say, all right, well, I might really want that, but I don't want it on my mortgage. I'll just get the wall made, and in 3 years' time, when I can afford to actually pay for that in cash, great, I'll get a fireplace put in then. But I've already got the wall built out for it. So you've got different options that can certainly work for you, but again, it's your first home, so don't get over the top. I know my first home was 14 squares, single car garage, right? And I loved the place. It was awesome, little 2-bedroom, right? So it's a starting point. I don't live in that anymore. In fact, I wish I still owned it because I paid very little for it and it's worth a lot of money now.
Yeah.
So, that's one of those decisions in life. You kind of go, geez, I wish I could have hung on to that. Probably could have too if I really thought about it, but didn't.
Couple of those myself, actually, Daz. Yeah, over the journey, they're the mistakes we make. So I would just say, it's definitely something we've covered before. So if you want a bit more detail on that, episode 5, top tips when visiting display homes, will cover all of that sort of stuff. So
for sure,
by all means, when you get through, like Darren said, like on average, when people build this home, how much do they spend? Just a range of 20 to 30K would be enough. That'll give you a proper idea. Yeah,
absolutely. Yeah, how much is it as displayed is kind of irrelevant. The next step, I guess, Cole, would be go and take some action at that point, right? So you've done your homework, you've sorted your finance, you understand what grants and stuff that's going to help bolster that sort of financial positioning you're in, etc. You've shortlisted back to 2 to 3, and then you've shortlisted that down to the sort of the package that you want to go ahead with. It's time to take some action. So, basically you're locking it in. You're going to go and pay a deposit for both the house and the land, and generally they are 2 separate deposits. Not always, depends. Sometimes the builder may own the land, so it may only be 1 deposit, but in most cases, it's 2, and at that point, I'd be saying congratulations to you. You're on the way to home ownership, and it's an exciting time. So be excited about it. A lot of people get nervous at that point. I've just made this big commitment, but ask anyone who owns their home outright now whether they look back in regret, and I guarantee every one of them says, "Geez, I wish I took action earlier." Even that the biggest regret is not taking that action at that point. So go ahead and take the action. I guess. too often we see people holding off, hoping for a better promotion or a cheaper price. And generally, it ain't often that happens. Not in my lifetime, Cole. We may have seen a bit of a correction in land price, but again, we're starting to see the bottom of that right now. So if it's time, you want to thinking about taking action, take it now. I've also seen people who have thought, geez, I've bought at the wrong time, and time fixes that anyway. So if you do buy what you think's a little bit over, you'll look back in 3 years' time and go, geez, I bought well, right? So if you're looking back in 3 days' time, you might be thinking, oh, did I get the best deal? I'm not sure. Property's a long game. Buying a home's a long game. If you're in there 3 to 5 years, you'll have more than likely made money out of that property. I guess do not, and we repeat, do not buy from the cheapest builder. And it's not, what we mean there is do your homework again, right? Because sometimes what you're going to find is you might think you've got the cheapest price, but there's going to be something come back and bite you later. It might be that they haven't fixed their site costs. It might be the exclusions on their site costs. It might be that you go into their colour studio and all of a sudden something that's $500 at one builder is $1,500 at this builder, and you're not even aware of that because you haven't been able to shop that item. If it's significantly cheaper than anywhere else, there should be alarm bells saying, hold on, that doesn't make sense. It should be pretty comparable. Most builders are going to be fairly similar in price for a fairly similar product. So, if it's 50 grand cheaper, why?
Even if it's 15 grand cheaper.
Yeah, absolutely.
So all that is, Daz, is, and because where I am, we're pretty price competitive. I wouldn't say we're cheap. I'd say we're quite affordable in the good value for money space. And we often, have people choose someone else over 10K, over 15K, and they regret that decision all the time. And the reality is for you as a first home buyer or even an investor, it doesn't really matter. If you are happy with a cheaper price, you have to accept and be happy with cheaper suppliers and cheaper trades for a cheaper outcome. And what that means is that you're more than likely going to have issues in maintenance or other stuff down the track as a result of the cheaper trades or the cheaper suppliers and the cheaper materials. It's not having a go at a cheaper builder, it's just common sense, so be mindful of that. If you've got a builder you prefer, or a consultant from a builder who really you trust and you build a good relationship with, but they're 10 or 15K more, go with them. Just whoever it is, doesn't matter where Darren is, where I am, go with whoever it is that you feel a bit more comfortable with. For the sake of 15 grand, you'll be able to afford it and you'll feel a lot more comfortable through the process. Yeah.
Again, Cole, a lot of people are paying, 1 to 2 grand in rent, right? If it takes twice the time to build the home, say instead of taking 5 to 6 months for a single story, it takes 10 to 12, there's 5 additional payments on a rent at 2 grand. You just cost yourself 10 grand. It's a matter of scale of what that looks like. So be mindful. Again, price is the end price is just one part of that. We mentioned warranties earlier. You can get someone who's going to give you a 7-year warranty. Someone might give you a 25. Someone might give you a lifetime warranty. Like all those things come into play. So be mindful of what it's like, and do your homework. Make sure you feel very comfortable about that. I guess the last bit is before signing the land contract, get a conveyancer, right? So you need a conveyancer. Get them to actually review the land contract and ensure that there's no surprises from a contractual point of view, right? If possible, sign the land contract subject to finance approval. And in the current market, ask for 21 days. Like asking for 14 days, probably not long enough. Like get it subject to finance approval and just go and get your broker to get your finance approved. At least if an absolute minimum, if you haven't got a pre-approval and the land's not titled, get your pre-approval in place and get them to be very comfortable that you're going to get a loan, right? So again, circumstances can change over that period of time, but at least you feel like you're in a much stronger position. You understand where things are sitting and away you go. But if it's titled, get it subject to finance, right? Get yourself 21 days. Go and get your broker, get them hustling really quick to get that finance through, provide them all the information they need, and away you go. But that'd be sort of where we sit, Cole. Maybe to wrap it up, run through the steps again, and mate, I think we're
Yep.
just about there today.
Yeah, the last thing I'd add with the conveyancer, so they're your legal representative for land contracts, ask them to put a clause in around the pegs, Darren, is what I recommend to my clients. So every block that's out there, they have pegs, survey pegs, essential boundary pegs on the corner of, the lots. Sometimes they get run over or go missing. And in that case, a builder will charge you a fee, usually, for a re-establishment survey. So one of the clauses I recommend, or give you the tip to put in, is just that all pegs will be present at the time of settlement, and that the developer will agree to that. Okay, so that.
And what you need to do is go out and check it just a day or two before the actual settlement takes place. So drive out there and make sure you can see them. You might need to bring a shovel with you because sometimes they're just under the surface. But if you know approximately where they are, just dig around that area. Often they're right, it could be only a centimetre under the surface, bit of extra soil and stuff's kicked over the top of them. So duck out there and have a look. You're right, Cole. And that can be, $750 to $1,000 saving you don't have to come up with later. So
it depends on $750 to $1,200 depending on who's charging it. We actually include it in ours with most of our options, just in case it's needed, which is good. But so to wrap it up, guys, the steps were: finance first, essential. Do your homework. And if you want to learn more detail about the steps we covered in terms of doing your homework, there's actually a number of episodes we've covered previously. So realistically, episodes 2 right through to 15 cover off most of the information and knowledge that you would need to know. In fact, more than you ever need to know, and to the point is what we would use to train a sales consultant. Like, it's pretty in-depth, nice and helpful about quotes and all that sort of stuff. That will help you out the more you want to dig into that. Step 3, finalize your needs and wants list and help that in alignment with your borrowing capacity and how much you actually want to spend. And as Darren said, step 4 is go and take action. So essentially, the first home's unlikely to be your last home, so treat it more like an investment. Take a little bit of the emotion out if you can, and get yourself into the market, and that'll pay off down the track. That's about it, Daz. Yeah, anything else to finish it off?
No, mate, I think it's a great Australian dream, owning a home. It's something I've really enjoyed. I bought my first house at 21, and I've owned a house ever since. It's been a great process along the journey, and again, you get to evolve, right? I've lived in 5 hours, I think, now, over that journey, and each one's been different. Each one's been awesome. We've lived in double story, single story, 2-bedroom, effectively a unit. So, you progress in life to suit your needs. And as a first home buyer, it's often just getting into the market. If I hadn't got into the market in our very first home, then that equity, and we doubled our house price in 5 years. So that set us up for the next one. That set us up for the next one. They're the steps along the way that really help you out. So, being in the market's a fantastic thing, and we wish you all the best of luck, any first home buyers. And if we can help at all, as always, shoot us a message through the Home Building Hub website. And away we go.
Yeah, beautiful. So that's homebuildinghub.com.au. And if you like what you've heard or watched, listened to, etc., jump on and give us a 5-star review on whatever platform that is. That'll be very helpful. And again, if you've got any other additional feedback as well, then homebuildinghub.com.au has a contact us section. You can go for it, pop some questions in there, and whatever you need. So thanks again for listening, guys. We'll see you on the next one.
Thank you.